Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Apple on the daily, weekly time frame, so we have a bit of a double top. The previous high of 2016 was 118.08, and we hit 118.02 and pulled back fairly significantly. Pretty much just poor timing with S&P 500 weakness, creating that double top. So we did see the bulls buy a bit of that dip. The low of the day was 116.20, and we did close 56 cents above that. You can see that lower wick. From here, we're looking at this low. We were looking at the low of 115.64. We bounced off of that to the penny, and then we formed another bounce off of that level by a few pennies below it. So 115.64 is the next support we're watching. If we break that level, we break the higher low pattern on the daily time frame, and that will indicate further consolidation is coming. From there, I'm looking down at 114.98. And on the weekly time frame, we're forming a bearish reversal, potentially an inverted hammer or a gravestone doji. We'll have to see how it plays out the next 2 days. But we need to be very wary at this double top, because if we see a bearish reversal candlestick on the weekly after that double top, we will look to pull back a few dollars at the very least to the downside. The weekly middle Bollinger Band will be a key support going forward because we held it 4 times on this dump back at the start of November on the election reaction. So the bulls are still looking fine on the weekly time frame, just looking like some short-term consolidation, which is normal and healthy after the big bull move that we've seen is approaching, but it does depend on the overall S&P 500 in my opinion. If we see further pullback and if we see the S&P 500 break the low of the reaction of the Fed day, we can anticipate Apple to follow along and continue to see some more weakness. Looking at Apple on the 5-minute time frame, no doubt who was in control all day today. An initial bull push, and the bears took over, and once we hit a new low of the day and started losing 5-minute moving average supports, it was just all lower highs, tightening range, and then a bear break, lower lows. Bears in full control of Apple on the 5-minute time frame, and that looks like that low at the end of the day was artificial because we didn't actually hit 116.20, and I can say that because the volume lining up with it and looking at this price action, it doesn't look like that actually happened. So need to look into that a little bit more in depth, but if not, the low of the day would be 116.57, and it would be a much less significant lower wick on the daily time frame. Either way, the bears are in control. The hourly time frame, look at this 100 period holding all at the end of the day. That's at 116.75. If we lose that level tomorrow, we're looking down at the 200-hour moving average support, which will be just under 116 at the open tomorrow. So the bears have not seen 2 red days in a row on Apple in December, and we have the potential for that to happen tomorrow. And again, a lot of that relies on what the S&P 500 does, in my opinion. More weakness in the S&P, and we're going to see some more weakness in Apple. I appreciate you tuning in. We'll check back in tomorrow. Have a wonderful night.